do it like a third party. So so if I find out that there's whole life, okay, everybody's on. I take a look at whole life, okay. I skim to it to make sure that the cash value page is in there. I just look at it, okay, and how I know it's all there. Then I say, okay, let me explain a story. Let's say you got a letter from your bank, right? And they sent you a letter, and they said there's these 5 brand new rules for your bank. And let's say you save $100 a month in your bank. You open up a brand new account at this bank, and they send you the letter. These are the rules. The first rule is the first 1 to 3 years, there's going to be a zero balance in your account. You're going to put $100 a month in there, and for the first 3 years, it's going to be a zero balance. The second rule, after the 3 years, it's going to earn 3 to 4% interest after the 3 years. So it's going to start to earn interest after the first 3 years. Then the third rule, to take any money out, it's got a little ATM. To take any money out, you got to pay 6 to 8% to withdraw or borrow your money. So in other words, you got to pay 6 to 8% to take your money out, of which it was only earning 3 to 4, of which it wasn't even there the first 3 years. Do you like it so far?
No.
Right? Okay, it gets better. The fourth rule is there's a 6-month clause, meaning if you need the money, the bank has the right, probably won't, but has the right to hold the money for 6 months before they give it to you. So if you need it by Christmas time, you need to ask them by June so they give it to you. Now they may not hold it, but they have a right to hold it if they want to. Okay? And then the fifth rule, if you die, they just keep all the money so there's no arguing or squabbling or bickering amongst the family who gets the money. They'll just keep your money in the account if you die. Do you like these rules?
No, I don't think so.
Right. Now, would anybody knowingly put their money in an account like this?
No.
No.
What's the key word in that question?
No.
Knowing.
Right. So, if you had money in an account like this, would you want to know, or would you want it to be kept a secret?
Of course, I'd want to be known.
If your friends and family had money in an account like this, would you want them to know, or would you want it to be kept
Of course,
secret?
I want them to know.
Okay. Right now, there's over $400 billion in accounts that work exactly like this. It's not bank accounts. That was just a story. It's the cash savings element of a whole of life insurance policies. Now let me show you. Then I show the policy, and I show the first 3 years. You got a zero balance. The cash value is earning 4%. You see that? If you want to take a loan out right there, it's 8%. You see on the paragraph where it says take it out, they may have the right to hold it for 6 months. Is in there. Then how do you know if you die? Well, you look at the cash values. If you got $3,000 in cash values and the insurance is $100,000, how much does a family get?
100,000.
What happened to the $3,000? You circle it. The company keeps it. Well, if you get a zero cash value and you die, how much does a family get? 100,000, right? So it doesn't matter how much cash value you got, you still get 100. So they keep your money. So if you had money in an account like this, and you could move it, would you move it out of there?
Yeah.
How fast?
Quick.
Exactly.
Like yesterday?
Exactly. See, that's the pre-test close. So I just told you now, if I can prove, now in my mind, I'm saying if I can prove this, how this works, I just replaced your policy. See that? Now, if that's the case, why is there so much money in there? Why does it? No, well, yeah, but let me show you. Because the insurance is not bought, it's sold, right? So this is called honey banking. Here's how I explain this. Let's say, I'm going to put a little story so it kind of makes sense, right? Now, let's say I'm a refrigerator salesman, right? And you have $2,000 to purchase a refrigerator. That's in your budget, let's say. And refrigerator A, right? And refrigerator B. Refrigerator A costs $2,000. They're identical brand, identical color, identical everything. Refrigerator B costs $1,000. Which one do you want?
$1,000.
Okay. A little bit more information. This has a 36-year guarantee. 36-year guarantee. Anything happens within 36 years, you get a brand new refrigerator. Which refrigerator do you want? A or B?
B.
B. Okay, I'll give you a little more information. Now, at the end of the 36 years, you get $4,000 back. At the end of this 36 years, you get 0 back. Which refrigerator now do you want?
A.
Now we're thinking about A.
You got it. Everybody, every day, all day, twice on Sunday?
Mm-hmm.
Sold, right?
Yep.
Okay. I'm a refrigerator salesman. I just sold you this for $2,000, right?
Yeah.
Well, I bought this one on the market for $1,000, and I sold it to you for $2,000, right?
Yep.
So how much money did I just make?
You made 1,000 right off the bat.
$1,000. Now you remember the rule of
72.
72, right? So that's 6, 12, 18, 24, 30, 36 years, right?
Uh-huh.
Every 6 years, isn't that gonna
Double.
double? So that goes to 2, 4,000, 8,000, 16,000, 32,000, $64,000. That's my money. I give you a check for 4,000 and I keep the 60,000. You're happy because you got your $4,000 because you won it. Who's happier, you or me?
You are.
You are.
Aren't I happy? Yeah. So if I box this up and I call this option C, and I say you can purchase A, or you can purchase C with the same money, would you have ever chosen A in the first place?
No.
Then why did you just go from B to A just a minute ago?
Because he wasn't given it as an option.
You didn't get all the facts. And that's why there's $400 billion in whole life policies today. Because insurance agents are not educating the full details, they're just selling A over B. You see that? That's why people say whole life is better than term, because they're not giving you all the facts. Does that make sense?
Makes
Yeah.
perfect
For your
sense.
story. Done.
And you walking